Well, welcome back to the latest edition of Commodity Chat powered by Trader PhD. I'm Head of Market Content Dawson Schmidt. Joining me again for a discussion this week is Ag Market Advisor Nick Lawrence.
Good morning, everybody.
Well, Nick, today is July 1st. Yesterday was June 30th, which was the quarterly grain stocks and acreage reports released by the USDA. Usually a big market mover, but we really didn't get much of a you know, bigger reaction like we've seen in recent years. I mean, for example, back in 2021 was my first time actually getting to react to this specific set of data. And, corn was up 40 cents on the day. So, I mean, there's some bigger volatility that we've seen in recent report days for this time of year. And, we got some higher trade yesterday, but not necessarily some massive reactions as we've seen before.
Yeah, for the day, it wasn't a very big range in relative terms. Um, if anything, I think since it was a little bit of a flat report as far as just surprises are concerned, I think that's probably what muted it the most. Um, and it really more or less just in a you know in a micro way, just in a one afternoon couple hours worth of trade, really just felt very just by the fact type situation. Hey, traders had X positions on and they get past the report, they just blindly took them off type of a thing. So just a very classic, sell the rumor by the fact. And now the market's kind of trading those numbers in reality.
Yeah. Yeah, definitely. I mean, and so just to kick things off with, talking about that report, again, let's start with the planted acreage. I think that's all kind of always the easiest place to start is that, the USDA did report that U.S. farmers planted 95.3 million acres of corn this year, unchanged from the March estimate. That's still a 3% drop in the fourth largest acreage in the last 82 years. We did see, some shifts in some of those states, per se, like, Illinois gained a little bit of acres, Nebraska gained some acres from March. There were some shifts, but I mean, in totality, I think it looks like most of those gains were offset. Most of the decreases, I mean, I guess you could say were offset to or, just not much of a change from one estimate to the other.
Yeah, no, it didn't seem like it. It seemed like yeah, from previous estimates that nothing really changed. I would say you guys kind of had sorted out what they needed to do as far as fertilizer and things of that nature, and seems to all have got done.
Yeah, I mean, I think that was the biggest surprise to me too, because we had our survey. There was some guys that were shifting acres because of fertilizer, because of prices. So, I mean, our own survey did show that there was a little bit of a shift, and we came in definitely low on the analyst estimate in terms of what other people were saying, just because we were noting a shift. But I guess if there was a little bit of a bias in terms of where our producers were located, if that kind of leaned into that of us getting a lower estimate than what the USDA was saying. But I mean, there was definitely a shift happening among some producers, but I guess not to the tune that, is going to be making a huge difference as we saw when that data came out. On the
Exactly, exactly. And I mean, I feel like that was the song I was singing the entire time. That
Yeah.
yes, there's gonna be guys shift, but just is it a material enough shift to really move the national number? I never thought it was big enough, and so far that's proven to be right.
Yeah, yeah, we definitely just have to go by the data that we're given. But
Yeah,
wanted to move
yeah.
on though, of course, that soybean acreage number, U.S. soybean acreage came in higher than expected at 85.4 million acres. That was a decent increase from March. That came in higher than the average trade guess and also an increase of 5% year over year. And so what we're seeing is, plenty of the Delta and southern states, as well as, plenty of Corn Belt states did a decent shift from corn into soybeans this year. Basically, looking at that normal crop rotation. But yeah, I mean, higher soybean acreage, that was definitely um, a little bit higher than expected as well.
Yeah, and each region I think kind of has its own little nuanced reason on why they could have or should have or did boost some acres on soybeans, instead of talking about every single little region on why, I think just broadly speaking across all of them, the incentive is there for seed oils, right? Strong bases, strong prices at those times, um, and the incentive to plant, um, oil producing plants, in our case, domestically, mainly soybeans, just made sense, right? And you can actually see that shift, in Canadian crop mix and potentially the Australian crop mix for this next year. That seed oils are the incentive is there to plant them.
Yeah, I mean, I wasn't really planning on talking about this, but I think that kind of goes hand in hand to your point is that we got updated data from Canada yesterday. We also got updated canola data for the US yesterday. And also in that acreage report is that Canadian and US farmers are expected to plant a record acreage of canola this year. Better
There you go.
prices, decent demand, recovering demand from what we've seen. And so, yeah, I mean, it's not just a shift into soybeans, but also a shift into just oil seeds in general.
Correct. And that's why, again, I'm not going to break down every single region on why the shift to soybeans makes sense, but specifically, if you look across those southern states, they're not going to grow canola, right? Beans just make sense down there. And so anyway,
Yeah. Wanting to keep moving along here though, of course,
yep.
looking at wheat, all wheat planted acreage 40 came in at 42.7 million acres this year, 6% lower than last year and lowest in more than a century as we've already been showing. So I mean, the small crop just continues to get smaller. That result came in lower than the market expectations. Helping provide that little bullish spark yesterday is that even with I think we were the lowest analyst guess yesterday, but yet the USDA came in lower than what we even had. So that was definitely a bullish surprise coming in with the wheat side of things.
Yeah, I mean, besides futures prices, just really not incentivizing production, um, basis. I mean, there's a lot of guys are just tired of dealing with it.
Yeah.
They just feel, that just trying to get a decent cash price across pretty much all regions is just ridiculous here domestically. And so you have a crop that, on the cash side of things, doesn't really pencil. Um, it's as intensive in a lot of cases, as corn, as far as getting it, some of those higher level yields, how many passes you have to make, between split shotting nitrogen and multiple fungicides and all those types of things. Um, the incentive just isn't there, and so, here we are, and the market's going to do what the market's going to do, and if the incentive isn't there to grow it, the producer stops growing it. So
Yeah, and that's a good segue in the last thing here with cotton is, talk about those incentives a little bit because we had acres come back into cotton more this year. 9.2 million acres was last year's final estimate. In March, the USDA came in at 9.6 million acres, which was, I think, above expectations. And again, this month they came in again above expectations, or I guess last month above expectations of now estimating the cotton acreage at 9.85 or 9.9 million acres. Again, I mean that it seems like cotton acres are starting to come back into the mix, whether if that's coming from taking out of from some corn, but also the fact of I think the USDA or not, I remember the USDA noting yesterday too that peanuts were also going down in acreage, and that was being converted to cotton this year. So I mean, cotton seems to be having a little bit of a higher incentive. Speaking of which, to have more acres this year.
yeah, and again, I think back when the market was, or when those producers were looking at making some of those sales, you had cotton anywhere from, I mean, well, basically where we are today, all the way up into the low or the high 80s. And so I think, with those prices during that time period, it probably made an insurance decision versus, or partly could be, coverage there on insurance versus maybe what their indemnity payment could be on corn should they have some issues. Again, I think during those times when those decisions were being made, I think it just made sense to have cotton in a lot of those areas down there through the south.
Yeah, we don't really survey for cotton as we used to, but that was definitely coming up in the mix of, having that basic coverage, promoting some of those acres. Um, Wanting to shift gears though to the quarterly stocks report, I think just rattling them off and then kind of talking about them after would be a good idea here. But the June 1 stocks for corn came in 14% higher than a year ago at about 5.96 billion bushels, land below market expectations, helping fuel in some of that buying yesterday. Soybean stockpiles at the beginning of June also totaled 1.06 billion bushels, up 5% from a year ago and slightly higher than the average trade guess. Lastly, all wheat stocks on June 1st totaled 920 million bushels, up 8% from a year ago, but 9 million bushels lower than the average trade guess. What are your thoughts for this that report? As you know, there were some interesting things in there in terms of, probably mostly for the soybean side, maybe a little bit on the corn side of things.
Yeah. Um, and I think the incentive was there all all winter and really all spring to some extent to move those bean bushels. I think the bean profitability was there most of the time, um, for some profitability for most guys on a cash basis. I think that the crush demand was just high. It is high. And so most of the basis there, it seemed like the incentive was there to sell those beans. Um, and and then maybe not quite as much on corn. Um, and then I think obviously the volumes of corn that's produced, in kind of the Dakotas, South Dakota, Western Iowa, that type of thing. That I don't know if there's enough bushels there to kind of skew those numbers in a sense, but um, the amount of bushels that those guys raised over there isn't helping things on corn.
Yeah, I mean the on farm soybeans stocks themselves, despite total positioning rising by 5% year over year, on farm stocks actually fell 14%, and so that was the first, or that was actually a decline versus the previous two quarters on a year over year basis, and so we were starting to see that happen during this time frame. That yeah, to your point, bushels seem to be getting moved. Um, and getting that shifted over to the end user, and seeing that demand, on the crush side, as you've noted.
And then I guess lastly, when it comes to the stocks, we were kind of talking yesterday, after we kind of digested a lot of this, that we I think that's going to be interesting to see moving forward. Have we actually seen a little bit of a high watermark and a little bit of a downtrend, potentially? Maybe, with the low acres and the relatively high, high demand, lower production, those types of things. It'll be interesting to see if our stocks do tighten up domestically and beyond the scope of this podcast right now. Um, Exportable supplies globally, do all of those kind of start tightening up. So there's an interesting story there in the wheat market for sure.
Yeah, to your point, I mean, if the USDA is going to start lowering any stocks for the upcoming season, then that should be foretold in the quarterly grain stocks here moving forward, don't you think?
Yeah, I mean it could be right, and then we could have a whole different discussion next year on planted acres of weed and all these other things based off incentives here. But anyway, yeah, things could be tightening up here for a little while.
Yeah, always some things that to keep an eye on with that for sure. Wanting to shift gears though, moving past the reports, news came in earlier this week that President Donald Trump did announce a temporary 8-month suspension on tariffs of Moroccan phosphate fertilizer. The administration did cite supply chain disruptions that we've seen, high fertilizer prices, insufficient U.S. production. The move is intended to provide relief to farmers that are facing higher input costs following those trade disruptions. Currently Morocco holds about 70% of global phosphate reserves, and once a major supplier for U.S. phosphate imports before tariffs were imposed in 2021. And so that's this first chart here is that in 2020 alone, Morocco supplied about 38%, more than a third of U.S. phosphate imports. Um, and that pretty much went to zero in the years to come because Morocco pretty much just said that if you're going to charge these higher prices or these tariffs on us to export to you, we're just not going to do it. And so this is kind of a little bit of a step back, or I guess not necessarily a step back, kind of a reversion of those tariffs, and allowing some more supplies that the U.S. can probably get its hands on here moving forward.
Yeah, and I think if I think if the Strait and all like the shipping issues, um, if a lot of that gets rectified, I think these global debt values could probably come together just a little bit, and I do think it would truly drive down our prices. I know the argument is in your graphic here shows that what's it matter? We have the lowest debt values right now, and well, seasonally that makes sense for one, and then for two, it also makes sense that um, others are higher because of their lack of ability to import, right? And so I think if some of these shipping issues do get normalized, um, I think it would be a tell. I mean, it would be a big benefit to us. But again, only having it, an 8-month suspension and those types of things, how much of effect will it actually have? Like, when we're talking about global trade, 8 months is not that long.
Mhm.
So not sure how much of an impact it would have, but if you know if the trade stuff, the shipping routes do become a little bit more normalized, and we can actually, you know, if some of these retailers could actually import a lot of Moroccan phosphate, it would most definitely drive down our prices even further. I think it's just my humble opinion. But I think bigger picture, I think what this highlights here is, and again, something we were talking about when we first saw this, is the powers that be know exactly what levers need to be pulled to reduce fertilizer prices, um, because they just showed their hand, right? They know what the issues are. Um, we'll see if anything gets solved.
Yeah, I think my biggest thing is just access, like having access to those supplies, not
Exactly.
necessarily saying that we got to drop, $200 a metric ton just because we can import Moroccan phosphate again, but just for the fact that we have better competition that, is not necessarily catering to big companies that were still making profits at the time that, we were importing Moroccan fertilizer.
Free
So,
markets are efficient markets, man. It's
yeah.
just the way it goes.
Yep. So kind of keeping things, at a fair level, keeping access, and access to the supplies that have been at very unaffordable levels, on a historical standard. So yeah, wanting to move on. Last thing here, kind of to talk about, of course, is, weather. What's the I guess we would be remiss not to talk about weather as July 1st here kicks off, but the U.S. is expected to see some ridge riding storms over the next few days. above normal precipitation could make its way across parts of Iowa, Minnesota, and Wisconsin over the next few days, let's say Wednesday through Friday, as this graphic is showing here from Eric Snodgrass. Totals are expected for eastern South Dakota, North Dakota, Nebraska, and northern Illinois, as well as moving up towards the southeast over these next few days. And then by this weekend, looks like Friday through Sunday, we can see some additional storms bring some precipitation to the mid-south and southeast. Um, Kind of reversing, I guess, the impacts of what we're expected to see for some heat this week.
Yeah, first of all, the Mid South does not, as far as I've been told from producers, Southern Illinois, Missouri, Southern Indiana, that whole area, they do not need any more rain.
No.
But anyway, yeah, so, some of the heat dome worries I think are being offset by some of these showers, but the heat dome issues, in my opinion, have less to do with lack of moisture, which obviously, like your typical weather market heat dome story, and more to do with overnight lows, which I know this is supposed to be a little bit more temporary. Overnight lows are supposed to tail off in a handful of days, but yeah, the past couple of days here in central Iowa, at 5 a.m. it's been 80 degrees, which is not good, right? And so, I think that is definitely an issue. But then I think even more so, and it's kind of on your next slide too, is this the heat mixed with this moisture. We thought we had some disease risk. Last year. I mean, this is an incubator for it, right? Just hot, moist conditions, and plus, all the winds we've had from south to north, kind of carrying the spores up through us. I think that's going to be a problem, but I think even bigger than just the disease risk problem just in itself, and this is getting a little bit nuanced, but I still think it might matter, is across the belt. I think we have a pretty wide planting window, and which creates variability in timing of these fungicide applications. And I think guys are going to have trouble getting their operations covered in an efficient manner, right? I mean, if half the farm needs to get covered one day, but the other half can't get covered, doesn't need to be covered because it's just not in the right growth stage, for another handful of weeks, that's going to make things kind of weird. So, um, anyway, heat's here, but moisture could be coming with it, so it's a little bit offsetting. But I think I think disease pressure is definitely going to be a problem, and there still are parts of the belt that don't need moisture.
Yeah, I mean we're always appreciative of these graphics that we can get from Eric because they paint a pretty good picture of, a lot of that moisture that came from the Gulf. And something else that he was saying this week is that, we're getting a lot of jet stream flow from the Gulf. And when we
Mm-hmm.
have that, if there's going to be disease in the South, Gulf jet streams could definitely bring that northward. We saw it last year with Southern Rust, and there's Southern Rust is making its way north, or was making its way north last year, and so we can see that problems in the south can migrate to the north based on where that flow is coming from, and we're currently seeing the conditions where that risk is definitely heightened. So yeah, I think he's starting to sound the alarm bells a little bit of just like making sure that you're aware of what could happen and kind of being on the defensive for this moving forward.
Yep.
Uh, Last thing here though, to kind of move with weather, I don't know, I mean, it kind of seemed worth talking about it when you and I were talking yesterday, is of course looking at the wheat prospective or not the prospective plantings, but the wheat harvested progress that we've seen over these past few weeks is that, wheat harvest is moving on at a rapid pace. We're nearly halfway complete for this time of year. And, things are pretty much done, and Oklahoma's wrapping up harvest. Looks like Arkansas is wrapping up harvest, and Texas is wrapping up harvest at a pretty quickly pace. Contrast to what's going on in Illinois, Indiana, and Ohio. Kind of seems like, to your point, a lot of these states that are getting plenty of precipitation, might be struggling to get in the field and getting some progress going on wheat here.
Yeah, so Oklahoma's almost done harvesting wheat because there isn't any, right? Same thing with Kansas, to some extent there, right? And so everybody knows the HRW story. That's HRW country. Yields are in the dump, right? And so I think that part of the wheat story is known. I think what is maybe a little less unknown or just not, making headlines yet, um, is more that Illinois, Indiana, and Ohio crop. They're struggling getting it out. Or we're going to have volume issues and quality issues, those types of things. Um, that can that I mean that's just another chink in the domestic supply armor, or could be. Should that end up being a real problem for our domestic supplies? Is that SRW? Is there a story there to be had? Yet to be seen, but I do think it's worth watching.
Yeah, definitely. Yeah, we were really hammering that HRW wheat story for a while, and now the question is there an SRW wheat story? So something to be looking at, you know, pretty closely here moving over these next couple weeks as harvest progresses and a little bit more of that crop becomes known, seeing what the USDA comes out with future estimates. But I think that'll wrap up our conversation for this week. Of course, Friday is fourth or is July 3rd, right ahead of the 4th of July holiday. So markets will be closed on Friday. Just wanting to set a reminder out for folks. So don't try to trade, I guess, or reach out to Nick if you're wanting to trade on that one.
Yep, no, they'll be the markets are observing it on the third there. So yeah, markets will be shut down. And crude will grow trade probably till noon or something like that. But pretty much trade non-existent there, um, and then the markets will be back to business as usual Sunday night.
Correct. All right. Well, sounds good. Appreciate your insights for this week, Nick, and we'll see what comes on down the pipeline to talk about next week.
Sounds good. Talk to you soon.